Hey everyone, Couch Investor back to another video for today. So let's talk about Teladoc. My last video was when they reported earnings. If you want to know my thoughts on that terrible quarter, you should check out that video because I'm not going to repeat that rant again and again. So I'm obviously well aware that it was a bad quarter and that they reduced guidance after that, well, just a couple of months and weeks before, they were extremely optimistic about the quarter and about the outlook that same year. Now that said, just want to remind everyone what Teladoc is trying to do and why for the long term this might actually be a tremendous opportunity. Now, obviously this was a huge COVID stock, growth got pushed forward. But the main story here is not the D2C, the direct to consumer side of the business, it's actually the B2B one. And B2B is much better because those are deals for years and years, and well, it's way larger than D2C. D2C was the pandemic push, right? The visits. But that's really not the focus here. The focus should be on B2C. And also, by the way, if you didn't know, healthcare in the United States is around 20% of the, well, economy, let's say. So that's what, $4 trillion or so. The market is pretty big. And Teladoc with their, they call it the whole care package, as you see here on this picture, it's not just visits, it's much more than that. And maybe you've missed the last two big announcements, let's say, that fortify this statement that's saying it's not just D2C, it's B2B as well. So first up we have this, Northwell Health collaborates with Teladoc Health to improve system-wide virtual care. I'm gonna skip to this line right here already, just so you get the big picture. So Northwell Health is New York State's largest healthcare provider and private employer with 22 hospitals and 830 outpatient facilities. The health system cares for over 2 million people annually in the New York metro area and beyond. So not a small partnership here. So what's basically the partnership here? So Teladoc, the global leader in whole person virtual care, today announced its agreement, well today, that was in April, its agreement with Northwell Health, New York's largest healthcare provider, to deliver connected virtual care and expand care delivery to patients both inside and outside the four walls of the health system. The new enterprise strategy will leverage Teladoc Health's collaboration with Microsoft, more specifically Microsoft Teams, improving clinical teamwork and communication among Northwell clinicians. And then number two, and this was in February, so we all remember the talks of, well, Amazon might just delete Teladoc, let's say, and push them out of business. But no, that didn't happen. So Teladoc Health and Amazon team up to launch Teladoc on Alexa. So what does that mean? Basically, customers in the United States will now be able to connect with a Teladoc care provider 24/7 from supported Echo devices for general medical needs. Teladoc on Alexa will initially launch via audio with video visits coming soon. So I hope this refreshes your memory, and if you never knew about this, well, maybe now you know. So there you have it, a more general picture of Teladoc. Now let's have a look at the financials. But if you want to support this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. And again, there are many links that can be very useful for you in the pinned comment. So let's look at some financials, shall we? Well, some metrics here. So total revenue obviously has gone up and up and up thanks to the COVID push. Now free cash flow has also been on the rise. Now lately it has been going down a little bit, but again, if you remember, I think 2-3 videos back or so, that was before obviously the disastrous last quarter. But as you can see, free cash flow is positive. Now return on equity, you might say, whoa, what is this big thing here? Well, as you remember, last quarter they had this one-time write-off, the goodwill from Livongo acquisition, so $6.6 billion. That's also why it's a huge hit and huge headlines. But if you go and look at this metric here, I added this one specifically for Teladoc, so EV to gross profit, right? Gross profit, not something else, purely gross profit. So EV to gross profit, the lower it is, the, well, let's say, more undervalued it is. Right now it's at 4.4 times EV to gross profit. You know what EV is? EV is basically enterprise value, and it's as low as it ever was. Now, if you want to have a little comparison, let's say with Amwell, so Amwell obviously on the revenue side of things, not close to Teladoc. Free cash flow negative, has never been positive. Return on equity, yes, right now is a bit higher, but overall, if you remove that goodwill thing, Teladoc beats that. And then for the EV to gross profit, they're extremely close. Amwell is 4.3 times, Teladoc 4.4. And as for the earnings per share and the projections by some analysts for the next coming quarters, this is on Seeking Alpha. This is the pro version. So if you want to access that, there's also a link down in the description and in the pinned comment to get a small discount. So basically EPS surprise. In the last 3 quarters, they actually beat it. But again, the last one was not that positive. Next quarter, the expectation is that EPS will come in lower year over year by 1.16%. But then in Q3, close to 15% increase year over year. Q4, again, a huge decrease there. Those are the consensus numbers, right? We're going to see actually what happens in each of these quarters. As for the longer term picture, I clicked here on earnings estimates. You can see here for the next 2 years, obviously the road to profitability is there, but it will take a while. So here we get the EPS estimates, the year over year growth, the low and the high, and the number of analysts that have those numbers in their models. So for Q4 2024, so December 2024, EPS estimates positive 11 cents. Now they do expect, one analyst here does expect them to become profitable in the second quarter of 2024 with an EPS of just 2 cents. Now, as for revenue, look at revenue growth year over year. We know that the company expects to grow around 25% for the next coming years, think until 2025 or so. For this year, they already reduced the guidance, so that's not going to happen, obviously. But overall, they are expected to hit close to $1 billion per quarter in that fourth quarter of 2024, which will represent a 18.17% year over year growth on that Q4 2023. Now, overall, to be honest, if you look at those year over year growth numbers, they actually look pretty reasonable, especially at current prices, right? Let's take an average of 20% here for the next, 2 years. I think that's pretty reasonable. And looking at the valuation grade here, an A-, so they clearly agree with that statement. As for growth, I think we got here a C+, so not the best, but pretty okay if you ask me. As for profitability, it's now a B- because of that gross profit margin and the free cash flow and those projections in the next coming years, so not that bad. So as you can see, yes, obviously if you just look at the stock, you think that Teladoc is going out of business. But if you look at the business itself, the future might look much better than what you just thought if you looked at the graph. Now, granted, last quarter was not good at all, and the trust, to be honest, has been lost. If you did trust the management before, you listened to the call, right now you don't trust them at all. So it remains to be seen what happens this quarter. Did they screw it up again, or did they manage to, get back on track? We're gonna have to wait and see until next quarter. But before I end this video, obviously a quick look at ARK Invest portfolio. This is the combined one. So number 1 spot, very surprising, is still Zoom. Number 2 is Tesla, 3 Roku. And then now Teladoc actually sits at number 6. It was much higher before, but again, the stock price has gone down. I believe they bought around $20 million worth of shares after they reported earnings. So it's not like they sold that much. It's just the share price has gone down significantly. So that's the combined holding. I believe in the ARK K one, it's number 8 there. Also Zoom number 1, Roku number 2, and Tesla sits number 3. So there you have it. Those are my thoughts. A little revisit on Teladoc. It's still in my portfolio. It's an extremely small position, around 1 point something % right now. Do I plan to add before earnings? No, I do not. I want to have a look at those numbers, want to hear what management has to say. And if it's much better than last quarter, then yes, for sure, I'll add some, because it is still a tiny position in my portfolio, but a tiny that has huge potential if management can execute. Obviously, do share your thoughts on the company. Do you still hold it or have you sold it? Leave it all down in the comments below. And if you enjoyed this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I see you all in the next video. Bye bye.